in listen-only mode.
Good afternoon, ladies and gentlemen. Welcome to Magic Bricks webinar, our endeavor to empower you with insights on the Indian real estate market and its upcoming trends. This is Aradhana, your moderator for today's session. With me today, I have Jayashree Guru. She is the head content and research with Magic Bricks. And Dr. Venkatesh Panchpagesan. He's the head IIM Bangalore Real Estate Research Initiative to assist you with all your real estate queries. Jayashree Guru is a business journalist with over 2 decades of experience in working with print, online, and electronic mediums with the Times of India, the Economic Times, and the Financial Express. She specializes in analyzing real estate data to come up with usable solutions to users. She works with consumers to provide advice on using available information to make wise investment decisions. Dr. Venki has almost 20 years of experience in academia and in global financial services industry after finishing his PhD in finance from the University of Southern California. He has also worked with Goldman Sachs Asset Management in New York between 2005 and 2008, overseeing trading research for their quantitative hedge funds. He is certified in India as a chartered accountant and a cost accountant and holds a PGDM from IIM Calcutta. Now, without any further delay, I hand over the session to Jayashree and Dr. Venki, who have an in-depth knowledge of real estate and research infrastructure in India. Jayashree, please take it away.
Thank you, Aradhana. Good afternoon, ladies and gentlemen. Welcome to the Magic Bricks IIM Bangalore webinar on the Prop Index and the Housing Sentiment Index. The Prop Index, we have found that this is the 5th year of the Prop Index. This is the 17th edition of the Prop Index, and we feel that it has been used in many ways as a tool which gives detailed information on price movements and supply and user demand for multi-story apartments and single floors listed across cities. When we say listed, it is listed on magicbricks.com. We use the data on magicbricks.com as a proxy of what's happening in the market. So what does it cover in this first edition of the 5th year? We're taking a closer look at the consumer preference. For a long time, we were focused on what is the supply in the market and what was the quality and quantity of listings in each locality, as well as price movements. This is the first time that we have taken a deep dive into consumer preferences to see how those impact real estate markets. The insight gained from this consumer analysis can actually assist in better positioning of projects if it is for the developers and lead to better transaction activity in the market. For instance, if you know that what consumers are looking for, developers can actually build towards the demand rather than what they think the demand should be. And consumers can actually figure out what is happening in the market, what others like them are doing. So how do you use the Prop Index? You identify your budget segment in which consumers are looking for options. These are the budget segments which will have relatively high transaction volumes. So you know that if others are doing something, maybe it's a good idea to follow the crowd and see what's happening in that segment. An investment in such budget segments will have a high probability of transaction and monetization of an asset. If lots of consumers are looking for properties in a certain area, one, you will be in a high demand area, so maybe you may not be able to negotiate as much as in low demand areas, but there must be something right about that locality which brings more consumers to that section. Look for localities that are preferred by the consumers and top budget segments in which consumers are looking for options in these localities. This helps you to identify the budget and location for investment. Also find out the budget segments which consumers associate with 2 BHK and 3 BHK. For instance, if you have a 20 lakh budget and you are looking for a 3 BHK, you by figuring out that others are not looking for this, the general trend seems to be that 20 lakh will get you a 1 BHK or at best a small 2 BHK. Maybe you should be able to correct your own expectations accordingly and use this information to assess whether the asset is priced correctly in a given locality. Let me very quickly give you the key findings of the Prop Index. The National Property Index witnessed a marginal increase of 1% in index value in April 2015. What does this mean? It just means that there are more properties listed for sale and that there has been a slight, a very marginal rise in values. The index is computed on the basis of the prices prevailing in different localities across cities, as well as the amount of listings, the number of listings that are on the website. Bengaluru witnessed the maximum gain of 6% in the city index. Delhi was at the other end of the spectrum with a 3% decline. Now this again you can translate. If you read what this figure tells you, you will be able to translate it that in Bengaluru for the first time you've seen a rise in property values. There has been a substantial rise in property values, but taken with the sentiment index that Professor Venkatesh is going to present later, you will realize that actually this rise in values may not be always a good thing. The rising index values may not be good because the consumer sentiment has dropped. The rising values has actually held back the consumers. Delhi, on the other hand, was one of the most expensive cities in the last 2 quarters of the Prop Index. And we find that that seems to be correcting itself because Delhi is a city which has been witnessing practically no transactions. Now, overall, the southern region comprising of Bengaluru with a 6% rise, Hyderabad with a 4% rise, and Chennai with a 1% rise were the best performers as far as index goes, followed by the western region with Mumbai 3%, Pune 3%, and Ahmedabad remaining stable. Having said which, remember that Hyderabad has been the least expensive market in the country among the big cities, and that has remained stable or even dropping for a long time. After the Telangana issue was resolved, the Hyderabad market is still struggling to find its equilibrium, and we feel that that seems to be settling down, and a 4% rise in Hyderabad cannot be directly equated with a 6% rise in Bengaluru. Bengaluru had no problems. It was a steady market, good healthy consumer demand, but the value of properties has gone up in Bengaluru as has stock. There is a lot of stock in the Bengaluru market. In Hyderabad, the amount of stock has gone up, and so have prices, but it has gone up from a very small base. So in Hyderabad, values going up a little indicates a kind of stability in the market. The Chennai market, which was not doing quite so well in the last quarter, has now shown a 1% rise, which means that there are some areas in Chennai which has posted an increase in the number of properties as well as a rise in the property, very marginal rise in property values. Chennai seems to be a stabilizing market, one of the better performing markets across the country. On the other hand, if you look at Mumbai with a 3% rise in values, already classified as the most expensive market in the country, a 3% rise in number of properties as well as values is not a good thing for Mumbai because the consumers are keeping away from the market. In Pune, a 3% rise indicates something quite different because there's a very healthy demand. There is huge economic drivers in Pune, and it has been a steady market. So when you see a 3% or a 2%, actually you should be able to assign it the kind of performance that the city deserves because of other factors in the city. And Ahmedabad has remained a flat market despite the fact that we have a prime minister from the state and that there are positive sentiments in the market. It has not been very actively transacting. Except for Gurgaon, which is at 0%, which means it's a flat market, hardly any transactions, not much change in either values or the amount of stock. The city index for other cities in North India, Delhi, Noida, and Ghaziabad, declined by 1 to 3%. We are talking about the period till July, and the Noida market was plagued by a lot of policy uncertainties. That has subsequently resolved itself, and today the Greater Noida and Noida extension areas are actually seeing a lot of difference in consumer sentiment, and this will probably be reflected in the next cycle's housing sentiment index and property index that will come in. Ghaziabad again has had a lot of infrastructural issues, and that is reflecting in the lowering of the index values. Also, the number of launches that we have seen in Ghaziabad has been coming down, and that too indicates that stock is coming down. Hyderabad emerges as the most conservative market, with 71% of consumers in the city looking for options in the sub 60 lakh segment. In a market where the values have been stagnant for a long time, and a slight enhancement of values, the consumer is clearly looking at those options which will match their wallet, and the drivers are mostly from outside the city. The traditional Hyderabadi buyer has not yet become active, but those who have come to the city to work seem to be very active, and therefore most of the activity is focused on the IT segments, the IT corridors. Gurgaon is the only city which displays a contrary trend. Against the national average of 15%, 35% of consumer preference is in the 90 lakh to 1.6 crore budget segment. We always blame developers for building large apartments and expensive apartments, but the Gurgaon market is a clear indication that when the quality of manpower is actually largely those who have come to the city to work, they have a large disposable income, and their preference is for quality lifestyle and larger format living, which is reflected in the 90 lakh to 1.6 crore budget in Gurgaon. This is the only city in the country where premium seems to be the consumer preference. In terms of consumer preference, in the premium and luxury segment, that is 1.6 crore and above, we've actually put a benchmark pricing saying that 1.6 is the premium and luxury segment, the cutoff for that. From anything above 1.6 crore is considered premium and luxury. Gurgaon, Mumbai and Delhi rank first, second and third in this category. Clearly Gurgaon because it has expensive taste. Mumbai because the luxury demand is very high in Mumbai, despite the fact that the supply is even higher. And therefore there is a lot of stock in the market. And Delhi again is a very expensive market, probably second to Mumbai, and there is some amount of demand for luxury. The 2 BHK, as a rule across cities, the 2 BHK category is the most preferred format with over 47% of consumer preference share. This means that most of the consumers, by and large, across the country, if we take the consumer base across the country as one consolidated body, we find that most of them seem to prefer the 2 BHK format. Rising property prices, very high home loan interest rates, even now it's above 9.5 in most cases. Consumers don't want to spend, and the salary levels have not been rising greatly. There is an uncertain global economic scenario. All these are factors which push the consumer to become more conservative in their property buys. Therefore, 2 BHK is the most preferred format, and over 54% of the 2 BHK format is in the sub 60 lakh category, which means that they don't want to loosen their purse strings too much. Most people are looking for products in the that cost them 60 lakhs or less. 3 BHK segment is among the higher budget segments. There is a certain category of users, largely driven by the IT industry, which looks for higher budget segments, and here 3 BHK is the preferred format and not the not larger than that. 74% of the 3 BHK preference is in the 60 and above segment, which means that there is a demand from 60 lakhs to anything above that. Let's very quickly run through the regional analysis. Delhi saw the largest decline in the city index as well as the listed price monitor. The listed price monitor is a very critical component that consumers and developers should be reading in the property index. While the city index tells you how the prices vis-a-vis the stock in the market has gone, the listed price monitor actually tells you how the prices have been in the city. Delhi saw the largest decline, which shows that there is a significant correction in this market. The holding power of sellers is actually coming down. The city index also declined by 3%, while the listed price monitor declined by 5%. This was because 71% of localities, and this is a significant number, if you take the total number of localities, almost 71% of them saw a decline in capital value. So it's not a one locality or two localities which saw a significant drop, but a uniform correction across the city. Dwarka is the most preferred locality with 11% share of consumer preference. Dwarka is a sub-city with cooperative group housing society. It has good connectivity through metro and through public transport. It has, you can see that the facilities are coming up in Dwarka, and it has 11% is a very healthy share of consumer preference. Clearly the middle classes are opting for cooperative housing, group housing, and places where they can afford to live, and which is connected well. The 2 BHK is the most preferred format with 44% share of consumer preference. Clearly, if people are looking for 2 BHK and Delhi is an outpriced market, it is logical that the sentiment will come down. 56% of consumers are looking for options in the sub 70 lakh segment. I don't think very many of them are finding what they're looking for. There are a few areas and not the much preferred areas that have properties in the sub 70 lakh segment in Delhi. In Gurgaon, the city index has remained stable and is same level as the previous quarter. Gurgaon is another market that is driven by the IT and a lot of business. It is actually almost the commercial capital of the Delhi NCR. Since it has such a large commercial driver, the demand has remained stable. It hasn't dipped alarmingly like in Delhi. 59% of localities saw a drop in capital lending to a 2% drop in listed price monitor. The Sona Road is the most preferred locality. This is where a large number of cooperative group housing societies as well as private developments have come up. These are all gated communities, and it's close to the commercial area, so the preference comes out of proximity to work. As well as other features like lots of schools, hospitals, entertainment centers, shopping malls, and so on. Gurgaon has one of the largest percentage of people, about 62%, looking for options in the rupees 90 lakh and above segment. Like we said earlier, Gurgaon seems to be a destination where people are looking for more expensive options, better quality of stock. 3 BHK is the most preferred format with 60% share of the consumer preference. Noida, the city index declined by 2% due to overall decline in capital values. Again, I reiterate, this is in the till the June month of June. Subsequently, there have been policy initiatives, so you may see some variation from what we are saying in the present market conditions. The listed price monitor also saw a drop of 1% in the last quarter, but we are seeing a difference in this. Noida extension remained the most preferred locality with 28% share of consumer preference. Noida extension can be equated to Dwarka in Delhi. It is the destination of end users. It is the destination of people, the middle classes, who want to buy their own home and move into it. Consumers prefer the 2 BHK format, over 50% share of it, over the 3 BHK, which is just a 35% in Noida. So 2 BHK does extremely well in Noida, while the 3 BHK does extremely well in Gurgaon. Initial sectors along and off the Noida Expressway are preferred in the higher budget segments. That's because they would classify as suburbs of Noida. They are the areas where there was more space, larger formats, and for those looking for large format living and modern living, sectors that are in the beginning of the Noida Expressway seem to be preferred. Ghaziabad posted a decline in values in 41% localities, leading to the city index dropping by 1%. Ghaziabad has more or less remained where it was as far as infrastructure goes. There have been problems of traffic congestion and overcrowding in many places, despite the fact that there was a big bump up in demand when the metro started functioning in Dwarka, that has kind of worn off, and people are giving a thumbs down to the lack of infrastructure there. The sub 50 lakh and rupees 50 lakh to 80 lakh account for most consumer demand with 44% and 33% share. At one time, it was the most affordable segment of the Delhi NCR. It has gradually gone up in value, but the other drivers have not kept pace with it. 2 BHK dominates the consumer preference with 51% share, again driven by end users, followed by 3 BHK format with a 33% share. Here, these are largely in areas like Indirapuram, which are populated by professionals who work in the Noida markets. Indirapuram is the most preferred locality in Ghaziabad along with Vaishali. They account for about 50% of consumer preference by locality, and these are the most easily accessible by the metro. Let's quickly go to the southern section. Chennai, with only 44% localities witnessing increase in value, the index saw an increment of only 1. Remember, Chennai Metro is waiting to start, so follow this market closely. The metro normally changes the way a city lives and moves. Chennai appears as a price-sensitive market with 45% of consumers looking for options in the sub 50 lakh segment. We find a lot of property that listed in the lower price ranges. While negotiating, some of these values may be scaled up or things like that, but more or less it is the lower pricing that seems to be attracting the Chennai consumers, most of whom are end consumers. The 2 BHK format dominates the consumer preference, followed by the 3 BHK segment. Velachery is the most preferred locality in Chennai. Chennai was one of the first cities that had residential development following planned commercial development, IT corridors, industrial corridors, and so on, and that's a very healthy practice in a city. Hyderabad at 4%, Hyderabad saw the highest increment in the city index with 60% of localities witnessing a positive price movement. It is the price-sensitive market, most price-sensitive market among the major cities. 58% of consumers prefer the sub 50 lakh segment. That clearly shows that it is a low-priced market. The consumers are looking to get good deals at lower prices. They also have a lot of stock in the market from which they can choose. This is probably one of the best times to look for property in the Hyderabad market. Miapur is the most preferred locality in the city, while other localities like Kukatpalli, Kondapur, Madhapur, and Manikonda are also witnessing keen interest. Most of the drivers are from the IT corridor. 2 BHK format dominates the consumer preference in Hyderabad with a 53% share. Our understanding is that much of this demand is being driven by those who come to Hyderabad to work in the city. Bangalore saw the maximum increment in the city index at 6%. This was aided by positive movement in values of in 70% of the tracked localities. Not necessarily the best thing for a city because the values have gone up, but the demand has remained stable. The Bangalore is a price-sensitive market with 50% consumer preference in the sub 60 lakh segment. As values go up, a price-sensitive market will face its own problems. Whitefield and Sarjapur Road are the most preferred localities across all budget ranges. These are both driven by the IT corridors. In line with price-sensitive nature of the market, more than 50% of consumers are looking for residential options in the 2 BHK format. Look at the western corridor. Pune saw a 3% increase in city index. Pune is a healthy market, end user driven by end user demand from the people who are coming to work in the IT and manufacturing segment. The local Puneite is also contributing to the demand. The sub 60 lakh segment has 48% consumer preference, showing the price sensitive nature of the market and also the stage at which we are in the market. Consumers don't want to loosen the purse strings too much, as I said before. 52% consumers prefer a 2 BHK format. 1 BHK category accounts for 25% share. 1 and 2 BHK formats are driven. 1 BHK because it is an education-driven city. A lot of demand is driven by students who come to study in the city and the young professionals who have come from other cities and are working here. 54% of consumers associate 3 BHK options with 80 lakh to 1.3 crore budgets, while 56% of consumers looking for 2 BHK are doing so in the 40 lakh to 70 lakh segment. Mumbai saw the third highest increase in the city index at 3% due to 67% of localities witnessing positive movement in values. Wouldn't know whether positive is a good word to use here. Rising values in Mumbai is not good news. The consumers are already not buying there. Given the high capital values, 1 BHK is the most preferred format with 45% preference share, followed by 2 BHK with 41%. This tells a story of its own. The end consumers, the ones who are actually looking for houses to stay in, are looking for 1 and 2 BHK, and 41% of the market are end consumers. They seem to find houses, if at all, only in the distant suburbs and the peripheral areas. Towards the city, the markets are overpriced, which leads to the rise in the city index. The 3 BHK format is preferred in high budget segments in prime suburban localities. Here too it's the suburban localities and not South Mumbai which is facing the maximum demand. Peripheral areas address 63% of the consumer preference, which falls in the sub rupees 1 crore segment. That falls in line with what I said before. The peripheral areas are seeing the most demand because it falls into the budgets of the consumer. Kharghar leads as the most preferred locality with 5% share of consumer preference. Good connectivity, completion of infrastructure projects are all leading to rise in these demands. In Ahmedabad, the city index remains stable and is at the same level as the last quarter. Not much activity in this market. 64% localities saw positive movement in values. The rising values in a stable market may lead to a slowdown in the market. 56% of consumers are looking for residential options in the sub 60 lakh segment, extremely price sensitive market. 2 BHK is the most preferred format with 46% share. 64% of consumers are looking for 2 BHK, are doing so in the sub 50 lakh segment. This is lower than national average, which is largely the 60 lakh segment. Preferred localities are situated in the northwestern and western half of the city in satellite Bhopal, South Bhopal, Taltej, etc. These have remained on top of the list for a while now. In the eastern region, Kolkata, the city index declined by 1% in the last quarter on account of 55% localities witnessing decline in values. Kolkata's economic drivers are very weak, and that accounts for the slowdown in the Kolkata market. Smaller BHK formats are preferred to manage costs, with 51% consumers preferring the 2 BHK category. 65% of consumers are looking for 2 BHK, are searching for sub 40 lakh. This is probably the lowest in the country today. Localities in eastern half of, like Rajarhat, Newtown, Action Area, Keshtopur, Lake Town have 21% of consumer preference. New properties which are modern, which have modern amenities are in demand. While southern parts with localities like Garia, EM Bypass and Tollygunj have a 12% consumer preference share. If you are an investor and you're looking to invest in the Kolkata market, you'll have to hold your investment for a while, because unless there is a strong economic driver, this market may not rise very fast. So the prop index very quickly is computed on the basis of listings of apartments and their capital and rental values on the website. Individual properties are aggregated into localities, weighted to cities, and then to the national index. The index is only a function of are values going up and is the stock going up. You should also look at the price monitor and the rent monitor, which tell you how the values in the city are performing. The weightage is based on the supply of properties within the locality and the city, and Magic Bricks has over 12 lakh active properties posted by more than 2 lakh active users in 585 cities and 17,000 localities. That's a whopping number of listings. Therefore, we use very large data sets to eliminate errors. 11 cities and 620 plus localities are covered in metros: Delhi, Mumbai, Chennai, Kolkata and Bangalore. Tier 1, Pune, Hyderabad, Ahmedabad, Noida, Gurgaon and Ghaziabad. There's extensive user demand analytics, consumer preference by budget, BHK and residential category, the budget associated by consumers with the 2 BHK and 3 BHK segments in a city. Use these statistics so that you will be able to compute what others in the city are looking for by way of price and size. Top preferred localities for different budget ranges and BHK formats, capital and rental value trends, the yield on your investment, which is a function of the capital value to the rental value at that point of time, supply statistics, and all the Times property editors which is Times Property is the property supplement of the Times of India. The editors of each market have given their perspective on the real estate market. Thank you so much, and handing you over to Aradhana.
Thank you, Jayashree, for this informative presentation to us. Dr. Venki, would you like to start your presentation from here onwards?
Yes, thank you, Aradhana, and thank you, Jayashree, for a pretty exhaustive presentation on what's going on in the property markets across the country. So what we do, this is an initiative with the help of Magic Bricks. I am actually heading the IIM Bangalore research initiative on real estate. So what we do is, if you can move to the next slide, Jayashree.
Yeah.
Yeah. So what we try to do in this particular sentiment index is to capture what consumers think about what's going to happen to real estate prices in the future. So what we just heard from Jayashree is through the prop index, we are capturing what is happening today or what is happening in the last few months. While what we are interested is to look at what is the sentiment in the future. So together, these two indices work well in the sense that one feeds back into the other. So for example, as Jayashree mentioned, if there is Bangalore is a market where the property prices are going up quite high today, it is going to dampen the sentiment for the future. And that's exactly what we are seeing here. Bangalore is actually, for the first time in our, I think, 8 quarters history, Bangalore is showing a drop in sentiment, that people are actually expecting house prices to fall. So this is, and again, if we expect the house prices to fall in the next 6 months, so in 2 quarters later, you will find the prop index actually capturing that, with the prices actually falling. So in other words, as consumers, I think both these indices provide valuable information about the state of the real estate sector today and in the future. And I think this would be a great sort of tool that you could use in your decision making process. Okay, so first let me, before I talk about some numbers, I wanted to describe briefly how we construct this index. So as I mentioned, this is a sentiment index. Actually keep in the previous slide only, Jayashree. Yeah, so what we have is we are actually going out to the various consumers in these markets. Largely we are doing 10 markets, which is very similar to what Jayashree had in the prop index. I think they have 11, we have 10, so there's one market which we have not started yet. So we go and ask people what do they think about prices in the future, and in the future meaning 6 months over the next 6 months. And then we also ask a host of other information, and together we put together a picture of what the consumers are thinking about the market in the future. This all the survey results are brought together into an index, and we use very widely used diffusion index methodology, and we bring down the value to a number between 0 and 200. So how do you interpret these numbers? So let's look at the middle of this value set, which is 100. So if you get a value of 100, that means that on an average, either 50% of the consumers think prices are going to fall and 50% think prices are going to rise. So together it sort of washes out. So eventually 100 would imply that buyers expect prices to be flat. On the other hand, if you get a 0 value, that would mean that every consumer that we have surveyed expects prices to fall, while a 200 number would imply every consumer is expecting prices to rise. So clearly between these two values you'll get an idea of what people think. And there are 2 things you want to focus on. One is the absolute level. So that will tell you, depending on where that number lies in the spectrum, it will tell you whether people expect on an average prices to go up or not. And the other important thing is how does it change relative to the previous quarter, which is another important metric, because that will tell you whether people are changing their sentiment compared to what they had in the previous quarter. And we do this for the national level, I mean, we do it at the 10 cities, then we aggregate it up to a national level index, and we also do a micro level analysis as well. So if you go to the next slide, so I'm just going to give you through pictures what has happened in the last 3 quarters. So there are a lot of colors out here. So just wanted to get you to focus on the dark maroon bar, which is at the top of each city. So that represents the index, the housing sentiment index for that city for this current quarter, which is, as Jayashree mentioned, it is April 2015 to June 2015. So obviously all of these numbers are below 100. That means there are more buyers in these markets who expect the prices to fall compared to prices to rise. And if you go to the next slide quickly, you will see that Delhi and Gurgaon markets, which have seen quite a high price appreciation over many quarters before, they are actually having the highest in negative sentiment, so where people are expecting prices to fall a lot. And if you go to the next slide, you will see in Bangalore, which is a very interesting market, the previous slide, please. In Bangalore, if you see, over many quarters, Bangalore had actually a positive average sentiment, which means people are generally expecting prices to go up. But then this was the first quarter when Bangalore broke that 100 barrier. So it became 86, which means there are more people expecting prices to fall in Bangalore, and it is in line with all the other cities that you're seeing. See, overall, what this picture is showing is that everything is in negative, below 100 territory, which means more buyers are expecting prices to fall. And there are some cities which are where the numbers are even greater. I mean, the numbers are lower than 100 by a larger magnitude than in the other cities. And Hyderabad is the only one where there is some uptick in the sentiment. As you can see from this chart, it goes from 89 to 95, which means that overall people are expecting prices to rise, but still in the total segment, there are still enough buyers out there who are expecting prices to fall. Okay, so that is how you want to look at it. Just first look at it whether it is below 100 or above 100. Below 100 would say that on average more number of people are expecting prices to fall, and then just look at it how it has changed relative to the previous quarter. So then the question is, why is the sentiment, if you can move to the next slide, the question is, why would you expect the sentiment to be so vastly negative across the market segment? And this has to do with a variety of factors, right? So you can imagine, you must have been reading in a lot of press about unsold inventory amongst the developers. Developers are not cutting prices, but they're trying to give you discounts in various ways. But that has not really caught on in the imagination of consumers out there. Construction costs have gone up. There is a mismatch in the demand and supply, and I think Jayashree talked about it some time back, which is there is more supply in the higher price category while more consumers are looking for apartments or houses in the lower price segments. And then of course the borrowing cost has not come down as much as one would have liked. Even though the Reserve Bank is trying to cut down the base rates, it has not happened fast enough for this market to pick up. So clearly there are many macro level factors that can indicate why sentiments are low. And the more distressing fact is these sentiments are getting worse. In the sense more people are expecting prices to fall. So which means if you reach a stage where consumers will just not get into the market segment at all, or they will delay their purchase enough for the sector to actually have a huge detrimental effect. Amongst the various cities, we've already talked about it. The interesting thing is the sellers. So we also do a seller sentiment survey, which is very similar to the buyers, except that we are asking potential sellers. I mean, as you would expect, the sellers don't expect prices to fall. They are in general bullish about prices, and the sentiment value, index value is around 132, which is much more than 100. But even in their category, you're seeing a drop. in the sentiment relative to the previous quarter. So these are all indication of the fact that generally the market segment, whether it's a buyer or seller, they expect prices to decrease in the coming quarters. If we go to the next slide, so we do a bunch of minor analytics where we take this housing sentiment index and break it down by various categories. This one is on the home price range. As you can see, the 20 to 40 lakh, as Jayashree mentioned, is probably the category where most number of people are in our survey. This is the most preferred segment. And even there, you could see that, the sentiment has gotten bad, gotten worse. And if you look at it in the higher price category, where there are not that many people in that category, but still these are where a lot of supply is in the marketplace, greater than 1 crores. There the sentiment has gotten worse as well. And in the case of 2 crores to 5 crores, which largely hit the bigger markets like the Delhi NCR markets, you could see that the sentiment has gotten even worse. So people are really expecting prices in those categories to fall. If you go to the next slide, so we do this by property type to break it down by whether it's an independent house, villa, land. And as you can see, land has been very stable. Even though there is general negative sentiment, it is not as bad as the others. And I think because of the various advantages that land provides to the consumer. The apartments are the ones which have gotten badly hit. In this particular case, even the villas and rows are also having negative sentiment. So in general, anything which is built up property has been having a greater negative sentiment, and partly this is coming from a higher inventory overhang that we have been hearing about in the press in the last few months. If you go to the next slide, this is on the waiting time. And if you look at the right hand side, you have the sample size for the amount of the percentage of consumers who are willing to buy within the next 6 months versus the ones which are willing to wait longer. So interestingly, 52% of the consumers that we have surveyed would like to buy the property within the next 6 months, which means that whatever the price sentiment that we are talking about is quite relevant to this segment. But this number has been dropping over the last few quarters. So which means that generally consumers are holding on and not and delaying their purchase. And part of it is, you can see that their HSI is 83, which means that they are holding on for a good reason, because they're expecting prices to fall so that they can get a better price down the road. If you go to the next slide, so we do the seller's perspective that I had mentioned, where all of these numbers are above 100. But even there, as you can see, there are quite a bit of variations. And this time we had interestingly asked them, what is the reason to sell? And if you look at the bottommost part of this chart, you have the booking profit. So these are people or investors who have bought property in the past and they're trying to get rid of it. They don't have quite a bit of variation in their sentiment, and I think a lot of it is because compared to what they bought, the profit that they're making is quite high. So it is not that they really don't care much about how much the prices vary in the next 6 months. They will still make profits. But there are other people, like for example, people who are moving out of the city for relocation purposes and so on, and there you can see that their sentiments are dropping. So in this particular chart, you have to look at the fact that these bars are getting smaller. That is, they're getting closer to 100. So here, the people who are relocating are more worried about the fact that prices might drop. So whatever they're holding on today might not fetch as much in the next 6 months. So if you go to the next slide, which is sort of giving you the macro picture, there are certain headwinds in the macro sector. One is the FDI rules being eased. The government is trying hard to promote these smart city. Now we have released a list of smart cities. The interest rates, there has been a couple of times when the interest rates have gone down. Some of the major banks have reduced their borrowing rates. But all in all, none of these have had a big effect on the sentiment as far as the consumers are concerned. So this is a bad news for the real estate sector as a whole, because the inventory is piling up and if the sentiment is making the consumers delay their purchase, you're going to get into a sort of a situation where at some point something should break. I mean, whether the developers cut prices or they push hard to get the inventory out, or the consumers finally say, you know what, I can't hold anymore, I need the house anyway, I just go buy it. So I don't know who is going to blink in this game. And if you go to the next slide, and I think that's sort of the last slide I think we have, which is just giving you an idea of the sampling technique. Not majorly relevant for people unless you're interested in it, but the main thing to note is that we do send surveys. There's a whole lot of data checks and analysis that we do before we include them for the purpose of the computational exercise. Okay, so I would stop here, and I think we can take questions.
Yeah, thanks, Venki.
Thank you, Dr.
Shall we
Venki.
start, Aradhana?
Yes, we will start taking the questions now. I request Jayashree to read aloud the questions and share their insights jointly with the audience.
Yeah, sure. Just give me a minute. There are a couple of things that I wanted to very quickly mention. There is this, according to a lot of research that we have done, we found that a lot of consumers who are willing to wait are the ones who want to sell their existing properties and take advantage of the stagnation of prices to actually upgrade the quality of their residence. But because there is not much traction in the market, if you sell and you want the best, you want to actually sell at the best price and buy at a lower price. Now that's not happening, and that's one reason why a lot of consumers, they may be the first to start buying if they can buy and then sell at whenever they get the best rates. And Venki, from what you have mentioned, it does seem like the sentiment is, you know, of the sellers is kind of coming down. They don't expect to sell very fast, and that's why
Right, exactly.
It's like a logjam in the market.
Yeah, no, it's interesting. So I think the triangle here is also the rental, right? So some people might end up holding on because they may have to relocate for work reasons where you cannot avoid because the time is critical, right? So they may end up relocating and not buying property in the new area, but they may end up renting it, which is in some ways good for the market because you need to have a healthy rental market to supplement the owner's market, but it may also not be good for the developers because you do have a lot of inventory available which they need to get rid of, and these people who are relocating are the perfect consumers for them, and they are not being able to tap into that.
Right. Let's start with the questions. I'm wanting to know criteria for looking for place for 2 BHK for investment with a budget of 2.25 crore in South or West Mumbai, such as land freehold, SRA. Location for renting out property, which floor to look at, direction of entry, open direction for air and light, bedroom, drawing room, looking to offset capital gain against industrial property sold to take possession by March 2018, says Ajay Desai. So Ajay Desai has money in hand, he has sold industrial property, and he has to pick up a property, and he wants to know, he has a budget of about 2 to 2.5 crore. Where should you buy and what should you look for? Ajay, it's an interesting set of interesting query, because what you're looking at is, and I see that you, even though you're looking at this as an investment so that you can offset your capital gains, you're also looking at what are the properties of the house that you should look for. Which floor should you look at? Now, in a city like Mumbai, if you're looking at a property that overlooks the sea, you go for the higher floors. If, on the other hand, you're looking overlooking a slum, you may not. That may not be the case. So the view of the property contributes to the value of the property. Also, the direction of the air. Just because there is a certain wind wind direction doesn't mean that every property facing in that direction should get you the benefits, because there may be other buildings, especially in a city like Mumbai, where there are high-rise buildings, it may be blocking your air. So here, I think one of the best ways to go through this is, and this is one of the reasons why we've created a section called Advice for people like you. Go to MagicBricks, a portal like MagicBricks, put your budget, put your location, and look for what are the options that you get. That shows you by and large what is the broader options that you get. Look at a segment called the amenities and see which are the amenities that look good to you. One good thing that you could look at, I'm assuming that when you buy yours as an investment, and you may be interested in knowing what your property will fetch you as a rental return on a regular basis, so that otherwise you have to pay the vacant property tax. If you're doing that, go to the rental section and check out, once you've shortlisted your properties, check out what kind of rental income you can get. That is a good indicator to what is the prevailing sentiment in the market for amenities like the ones that you're looking at. This will tell you where you can get a property within your budget, what are the broadly the amenities that you have, and tally that against the rental returns that you get, and you will be able to compute what kind of yield you get. Now you may not be buying a property for the rental return, but remember, if you don't lease out your property, you have to pay a vacant property tax, and that is that takes its toll. You also have to pay the outflow of maintenance and so on. That takes a toll on your investment. The third thing is that if you have a regular rental return, it kind of gives you a steady return. It is good because it gives you tax breaks as well. And when you after a period of time, when the leveraged value of your property goes up, you may have ended up earning well through the cycle of wait. Venki, you have anything to add to this? Venki?
Yeah, hi. No, I was saying that I think you had covered all the parts. I mean, the main question or the main point that I wanted to add is that the value of the property or the value of the rental is based on a variety of factors. So all of these factors should add up together. So I think Jayashree gave you a good roadmap of how to go about doing that. So I think I don't have much to add beyond that.
Okay, and Ajay, if you have any more queries, specific queries, you're welcome to write to openhouse.magicbricks.com, and we get queries addressed regularly on this by experts. We've got Sarita Mahesh saying, want to know the recommendation for luxury apartments in Kondapur. In social media, lots of litigations are floating. Now, Sarita, this is a problem in the markets, property markets in India. What you've done is the right thing. When you look at, there are 2 or 3 things that you should do, and there are a few initiatives that MagicBricks is undertaking which may help consumers like you. One is, like I said earlier, go to the website, post your query, and see what your money can buy. What are the options that you get? Identify the ones that you like the best. Now, once you've identified that, it is a good idea to go to the social media and check out the chatter. What are others saying? In the absence of any formal metrics right now, it is good to know what other users are talking about that developer. Check out whether the developer has been completing projects on time, maintaining the projects post-delivery, and so on. That is also important for a buyer. There is, as a result of these kind of queries, MagicBricks is putting together a developer profile, which is actually telling you, we give you the information to make your informed choices. Maybe another couple of quarters later, you will have a fairly exhaustive list of developers and their development profile over a period of time, which would help you to assess this. In the absence of that, I would say please go and check out social forums. It's a good way of assessing whether you should buy that property. Venkatesh?
I mean, I think the bigger question is how do you verify which social media chatter is reliable and which is not. So I think so far we have not had an independent assessment of the risk that generally that is being talked about, right? Whether there is an issue with the proposal. So I think there is a need for that, and I think the government has not taken any effort to make all these issues transparent. So I think until we have that resolved, unfortunately, consumers have to rely on friends, family, or even physically going out, checking out information and so on. So I think that's the thing. And of course, the portals like MagicBricks have been doing their own independent research, and they put out their own information about these projects. So I think we have to rely on these things for the time being till we have that sort of an independent assessment by the government or by some other agency.
We've got Arun Sondriyal saying, for Dwarka, does any data exist? I think, Arun, you haven't completed your question, but I will take it nevertheless. For Dwarka, does any data exist for 3 BHK, I think 3 and 2 BHK? Yes, one good way of doing this, Arun, is to go to the website, go to Delhi and search for Dwarka. Dwarka has many sectors, and Dwarka has a phenomenal amount of stock in the market. And interestingly, the amount of stock that currently exists in the market is just a fraction of what actually exists on the ground. Because I don't know how many of our users would know that Dwarka had a lot of problems with there was a High Court stay order which has been in existence for the last 10 or 15 years. As a result, property, ready standing property are lying vacant right now, waiting for the stay to be vacated by the government authorities. Many many consumers who have bought into these cooperative housing finally have taken matters in their own hands, and they have gone ahead and done the allotments without the government intervention, and they have started staying there with or without a vacation of the High Court order, because they have now retired and they need the houses to stay in. As a result, Dwarka has a phenomenal amount of stock. The day this High Court order gets cleared, we will find that Dwarka will be one of the most active markets, because it is clearly in demand from consumers, and there are options in the 1, 2, 3, 4 BHK categories. It has all kinds of stock, and it should have been one of the healthiest real estate markets in the city. It still commands a huge 29% demand. Venkatesh?
I don't have anything to add here, Jayshree.
Oh, okay. There is Bhavish Bhatt who says, I am an end user looking for a 3 BHK unit in Koramangala. I have a transferable job and may have to sell it off in the future. Do you see good appreciation potential? Koramangala is well developed, has prim and proper neighborhood, and real estate values are already high. Now, Bhavish, you're looking for a property as an end user. When you sell in a place like Koramangala, it is a in-demand locality, and the property values are not going to suddenly drop in the future. But currently, you are looking at it as an end user. When an end user looks for property and an investor looks for property, it should be in two different ways. And let me very quickly explain. For an end user, it is important to see that there are no significant traffic snarls near the location. You want to see that it is well connected by public transport like metros and so on. Even if you don't use the public transport, the people who attend to you, who help you in your house, would use public transport, and it is good to be near. You have good public transport. You also want to see that your schools, hospitals, your entertainment options and so on are close by. Now, Koramangala is centrally located. I don't think these are big problems. But look for your property today as an end user. Look at the convenience of staying there. Don't think about whether you should leave off these conveniences and buy something that is early in the development cycle. Maybe if you buy in North Bangalore, you will find that properties are cheaper than Koramangala. But do you want to actually stay there? So as an end user, your psyche should be different from somebody who's looking at it as an investor. Venki?
Yeah, I think, I mean, one other thing I want to add is as an end user, and again, when you talk about being an end user, you should have an idea of what is your duration, right? Are you going to be here for 5 years, or you're in a transferable job? But in a case like Koramangala, you should also be worried about, as an end user, basic infrastructure thing like water, for example, and as Jayashree mentioned, the connectivity of Koramangala is great. I mean, you are in the best part of town, and it's accessible to all major parts of the city, and except that the traffic is horrendous. So if you're looking at somebody who has got a family and you have schools to take care, then it is going to be very hard. But if you're talking about retirees or people who are bachelors or very early in their life, then it's a lot attractive because you have all the facilities of to enjoy in Koramangala. So I think it depends on where you are in your life cycle, and also look at, in that duration that you're going to be holding that property, how much the infrastructure is going to last, and what is the cost you will have to pay for that.
Exactly. And plan for today, let tomorrow take care of itself. In a place like Koramangala, you're not going to see a dramatic drop in values. Also, if you are interested in exiting a real estate investment, even if you were to move out of a place, don't sell when the markets have tanked. When markets tank, they also go up after a period of time. Real estate is a cyclical process. Just like in stock markets, you are advised not to sell when the stock market crashes. Do not panic and sell. Similarly, in property, which is a very, very high ticket investment, you should not sell if the market is low at that time. You should probably ride the wave and wait for the markets to go up before you sell. So currently, look at it as an end user. When you're selling, that time think of it as an investor. Let's go to Mohit Shetty's question. He says, where should I invest if I have a 50 lakh fully furnished 1 BHK in a well-established locality, or 2 BHK in a locality which is still developing but isn't performing good when it comes to price appreciation? Initially, I would like to lease it out, but in future, I might use it. Now, Mohit, you are not a current end user. What you're actually looking at is, I'm not sure which city you're talking about. I think you're talking about Mumbai. Let me put it like this. If you have a fully furnished 1 BHK in a well-established locality, you are likely to get a good rental return, which means that if you put your 50 lakh in, you're expecting to get the best rental returns. A little while ago, I said, go to the site, put what your money can buy, put 50 lakhs there, see what you get in your 1 BHK option and in your 2 BHK options, which are the localities. Check out what the rental returns, markets there are, so that you'll know what you will be able to earn every month. If it is fully furnished, you can add a 15 to 20% more rental return to whatever is in the unfurnished properties. But after a period of time, it is a locality that is in demand, therefore it gets good rental return. But remember that the rate of growth of that property value may be much less than the other area that you're talking about, where you can get a 2 BHK, but it is still developing. There, your leveraged value over a period of time is going to be much higher than if in an established area. So what you really need to look at is, are you looking at current rental returns, or are you looking at future leverage returns? Spend in a locality that is early in its development cycle, you'll get a lower rental return, but a higher leveraged value. Venki, would you like to comment?
Yeah, yeah. I think it is a trade-off, as Jayashree mentioned, whether you're getting a good rental return off right away. But I think the bigger question is also the rate at which the development is going to happen, because in the last cycle we have seen that developments can suddenly stall. Infrastructure projects can stall for various reasons. An example is Koramangala. There's some widening of the bridge, and a flyover was initially proposed, but then suddenly, people got together and they shot it down. So these are things that can happen. So there is a little bit of higher risk when you're taking a developmental cycle. You're betting on developmental cycle. But I think one thing that you may want to consider is, in most cases, the industry comes first and then the residential development happens. So if you do have cases where some large companies have moved or they have bought land and they're thinking of expanding their campus and so on, that's a very good way to bet on, and you can ride on that sort of development.
Yes. We've got Ravish Gend who says, I want to invest rupees 50 lakh in Bengaluru. This is purely for investment purpose. Can you suggest some good localities? Ravish, use the same logic that we told you. Go to Magic Bricks, put 50 lakh in the Bangalore section, and it will show you a host of localities where you can get your property. Now again, you have to take a call whether you want to. You're purely an investor, so you're not bothered about whether your rental returns come. So you are buying probably in the early stage of your of the development cycle. There are 2 or 3 ways you can do this. If you want to put all 50 lakhs today, that is one way of doing it. You buy a house that is ready, probably a little away from the main city, but it is close to economic corridors like Venki mentioned. Then in those economic corridors, you know that there's going to be steady demand. So once your property is ready, you can get a rental return, and the leverage value is also likely to go up because you're not entering at value. The other way to do this is you may probably, there are a lot of interest rate subvention schemes that are being launched in the market. Go for somebody who has a good track record, and that you should be checking out with various things that we mentioned earlier. And you put in a portion of your money into your property investment. And the developer then assures you that after a period of time, when it's ready for possession is when your investment kicks off. You start paying the rest of the money. So you've actually blocked only a portion of your money, and you're actually safeguarded against delays in project delivery. So what happens is that while this is going on, you may want to put your that regular your regular EMI into maybe some other asset class like the stock market, let it grow, and by the time you get your property, you will be able to use that to put down your principal amount. That is also a good way of considering your cross-leveraging your investments. It's a good way of making your money go a longer way. Thank you.
I think you've said it very nicely, Jayashree. I'll just stop there.
Okay, let's go to Suval Ghosh, who says that I'm contemplating on buying a home. However, since I work in Ahmedabad and my native state is West Bengal, I'm confused about the city to invest. Please advise. Suval, if you are an investor, right now the Kolkata markets are not giving you the best returns. Ahmedabad is a slower market, but if you're working in Ahmedabad, why don't you buy in a good place where you will get your property that you within your budget? When you decide to move back to your home state, you may want to sell this off and buy something there. Venki?
Yeah, I think the development of a city is a function of various factors. So I think, as Jayashree mentioned, Kolkata is probably not very attractive because there's not much activity in terms of that is going to propel the growth. So it is largely the existing market, existing set of buyers buying or selling from one to the other. So it's not like a new set of jobs and set of consumer demand is being created. So I think that problem, if you are looking at as an investor, I think you should definitely not invest in a city where there is some stagnation. You should go after cities where there is a growth, and I think Jayashree mentioned earlier about Pune. So if you are an investor, I think you can take a little bit of risk and invest in a different city, but which has all the characteristics of a growing or of a city that is breaking out. And Pune looks like one right now in sense of there's a lot of economic activity, there's a lot of people looking at Pune as an option, and Pune as a city to live is also not bad. So there are many people who are willing to relocate there. So given all of those things, I think as an investor demand, you would rather go there. Bangalore is another option, but Calcutta is definitely not one.
Right, and this is where, Suval, you should be taking the reading the reports. The reason why we are holding this webinar today is because we believe that the Prop Index and Housing Sentiment Index are actually giving you a lot of information which helps you to make your choices. When you are confused, look at what how the city has performed over a period of time. Both the prop index and the sentiment index give you clues about how the city is performing currently, has performed earlier, and will perform, is expected to perform in the future. Then as an investor you will be able to come out of your confusion. Let me go to Wasim Mohammed, who says, is this the right time to invest money on property in Hyderabad? Please share your thoughts. Absolutely, Wasim. Hyderabad is a market that, like I said, has been slow for a long period of time, has come out of its major problems. There is most of the large commercial occupants have already taken up land for growth. So that tells you that there is going to be commercial activity in the city in the future. Also, there has been a lot of focus on upgrading the infrastructure of the city in terms of roads, drainage projects, and so on. So today, probably you will get good values for your, you'll get property in Hyderabad at very competitive values. Will it change overnight? No, but steadily we see that the sentiments have gone up, the index has gone up marginally. That shows that the Hyderabad market is poised to go higher. Venki?
Yeah, I think the sentiment index that we were talking about earlier, right? So that also shows that the Hyderabad sentiment is picking up. It has been down for a long time, and I think now with all the uncertainties cleared out, I think it is a good market which is sort of ripe for a growth. The only question is there are macroeconomic headwinds that seem to be happening now. As you can see in the global market, there's a lot more volatility. There is a whole lot of economic activity that can slow down if something happens in the West when the US government increases interest rates and so on. So I think those could have a detrimental effect in the progress of Hyderabad market. But assuming that will also be temporary, if you're looking to be there for some time, this is a great time to get in.
Absolutely. Now we get on to the last question today. I think we have overshot our time, but the questions were very interesting, so we've continued to take the questions. We've got Dulal Haider, who says, my property is in Palm Beach, Navi Mumbai. I bought it for 80 lakh 2 years back, and right now the market price is 1.2 crore. Should I stay invested or exit? Dulal, the markets are not, the Palm Beach and Navi Mumbai markets have performed better than the rest of the Mumbai market because they are in demand. However, this is not the right time to sell just because you are getting the you already getting a rise of about 40 lakh in your investment. But remember that if you exit this investment, you have to invest it somewhere else. If you're getting really good options to invest it, reinvest your property, your money, then go ahead and sell. Otherwise, I would suggest that keep a close watch on that market and see if the market is actually going to show signs of rising a little more. As an investor, I would say that you should take advantage of that, but you're very close to some point when you should be looking at selling your property. Venki?
I have a slightly different take. I think it's just like investing in stocks. You know, if the investment is reached a stage where there's not much upside from now on, which is what is happening with all these inventory overhang in the real estate sector. The upside is going to be capped. So if you're a smart investor, you would want to get out of it when things are going well. But as Jayashree pointed out, you have to do something with that money. So you could, if you can find another area which is trying to break out, that could be an option, in which case first get that part cleared before you sell it, because otherwise you have the clock will start ticking for you to reinvest.
Right. Venki, we've got just one more query that has sneaked in right now. It is how is the market of larger format houses doing in Chennai real estate market? I'm not looking at premium areas, I'm looking at 3 and 4 BHK units, asks Vijaya. Vijaya, we see that in the Chennai market, the premium market in city areas is the demand is very robust. We don't see a huge number of transactions there. There is also supply, so this is a good time for you to look at. If you're looking along the economic corridors near the manufacturing hub or the IT hub, that is another area where you may want to look at, because there is lots of stock in the market, and as a buyer or a potential buyer, this is a good time to, you can spend a little bit of time doing your research. Venki?
I don't have much to add on a specific thing like this, but I mean, I think in generally the larger apartments, as we have seen in the sentiment index, the bigger apartments, generally the expectation is the prices will fall. So if you're looking to buy, I think this is a great time to get in.
Right. Thank you so much, everybody, for participating. Thanks a lot, Venki. That was a very nice webinar. And back to you, Aradhana.
And I am really thankful to Jayashree and
Thank
Dr.
you,
Venki
everybody.
for conducting this informative webinar with us. You're most welcome, Dr. Venki. It was indeed a great session. I would also like to thank all our participants for their support in making this webinar a success. Thank you, Jayashree. Thank you, Dr. Venki, for getting the time out and having us for the webinar. And thank you all for joining us today. Have a great evening ahead.
Thank you, everybody. Have a good day.
Have a good day. Bye.
Bye-bye.